Welcome to the Deep Dive. We're the show that takes a pile of sources and boils them down to what you really need to know fast. Today, we're diving into, well, a giant in the fast food world. Probably one you know pretty well. Think KFC, Taco Bell, Pizza Hut, maybe even Habit Burger and Grill. They're all under one roof. Yum, brands. And our job today is to unpack their latest numbers, the second quarter results for 2025. We're going past the headlines, looking at things like system sales, that's basically total revenue from all their stores owned and franchised, and same-store sales, which tells you how locations that were open last year are doing this year. We want to see what it reveals about where these big names are heading. We're pulling this straight from Yum's own earnings report.
Right, and it's more than just numbers on a page, isn't it? It's about how they're adapting. We're seeing some really fascinating stuff, like a huge jump in digital sales, a major leadership change coming up, and honestly, some surprising differences in how the individual brands are doing. You might be interested to see who's flying high and who's, well, facing some headwinds.
That's a great way to put it. So let's start with that big picture view. Yum. Brands overall in Q2 2025. What are the main takeaways?
Okay, globally, things look pretty solid. Worldwide system sales grew 4% if you take out the effects of foreign currency changes, which just for everyone listening means we're seeing the real underlying business growth without exchange rates messing with the numbers. So 4% is decent. And they didn't slow down on expansion either. They added, get this, 871 gross new units in just the quarter. That helped push their total unit count up by 3% overall. That's a lot of new places opening up.
Wow, 871. That's huge expansion. But the number that really popped out at me was the digital side, over $9 billion in digital system sales,
Right.
and hitting a record digital mix of around 57%.
Yeah, 57%.
That's just incredible. I mean, are we basically saying that ordering on an app is now more common than walking up to the counter for more than half their business?
It certainly looks that way. And that 57%, it's not just about making it easier for you to order. For Yum, that's a massive amount of data. Think about it. Personalized offers, better inventory management, maybe even optimizing staff schedules. It's way more than just a sales channel. It's becoming central to their whole strategy. And the bottom line looked okay too. Reported EPS was $1.33. But the number they emphasize, EPS excluding special items, was $1.244. That's up 7% from last year.
Okay, you mentioned special items there. Can you quickly break that down? Why do they report numbers with and without those?
Sure. Good question. Special items are basically costs or gains that aren't part of the regular day-to-day business. Think like restructuring costs, maybe consolidating headquarters, those big franchise changes in Turkey and Germany we might touch on. They're usually one-offs. So Yum reports numbers excluding special items, like that EPS figure or core operating profit, to give a clearer picture. It helps you see the ongoing health of the business without those unusual blips, Got it, that makes sense. So stripping out the noise, the core business looks pretty healthy.
Yeah.
What did the outgoing CEO, David Gibbs, say about all this?
Well, Gibbs really leaned into the positives. He talked about the power of our bold food innovation, digital transformation, and the strength of our iconic brands. He gave a specific shout out to Taco Bell in the U.S. for, I think the quote was, meaningfully outpacing the category, and also KFC International for that huge unit growth we mentioned. He also reflected a bit on his 36 years there and expressed a lot of confidence in the new leadership. Sets a pretty positive tone for the handover.
Right, the handover. That's the next big piece here, isn't it? The strategic side, starting with leadership. What's happening there? Yeah, it's a major transition. They announced back in June 17th, that Chris Turner is taking over as CEO. He's currently the Chief Financial Officer and the Chief Franchise Officer. He steps into the CEO role on October 1st, 2025. And David Gibbs isn't just disappearing. He's staying on as an advisor through the end of 2026, which should help make it a smooth transition.
Okay, Chris Turner, CFO and Chief Franchise Officer. What does his background suggest about where Yum might be heading?
Well, Turner's been credited with pushing some bold actions. Things like really transforming their digital and tech side, launching that Bite by Yum tech hub you hear about, also centralizing their global supply chain, driving new concepts. So given that background, especially in tech and supply chain, you could probably expect an even bigger focus on efficiency, maybe more AI, maybe rethinking restaurant layouts for digital. It definitely signals that tech is going to be absolutely core, not just a background thing.
Interesting. And sticking with innovation, but shifting brands. Taco Bell's doing something pretty wild with drinks, right? The Más Café.
Oh yeah, that definitely caught my eye too. They announced late June that they're scaling up this Más Café idea. Plans to have 30 locations by the end of this year, 2025. And it's not just your standard soda machine, not at all.
No kidding. The report mentioned over 30 signature drinks, things like churro chillers, fancy coffees, refrescas.
And get this, Dirty Mountain Dewy Baja Blasty Dream sodas.
Haha. Okay, that sounds intense. But clearly they think there's a market.
Absolutely. It sounds maybe a bit crazy, but Taco Bell knows its audience, right? It's a huge step beyond their usual drinks menu.
And it ties into a bigger goal, doesn't it? They want beverage sales to hit, what was it, $5 billion by 2030?
Exactly. $5 billion. So this isn't just a gimmick. It's a serious attempt to build a whole new, potentially very profitable revenue stream.
So for you listening, maybe think about this. How might a new CEO focused on tech and efficiency change the feel of these brands you go to? And could something like this Taco Bell cafe concept actually change how you use fast food, maybe stopping by just for a fancy drink? It's shifting expectations.
Definitely. Now, should we dive into how the individual brands actually performed?
Yeah.
Because, like we hinted, it's definitely a mixed picture.
Yeah, let's do it. Starting with the Colonel, KFC.
Oh, wait, KFC division. Globally, system sales were up 5%, same-store sales up 2%, pretty good. Operating profit grew 9%. But the real star is KFC International. Just huge growth there. They opened 566 new restaurants, gross additions, mind you, across 58 countries. That's 7% unit growth internationally. International system sales grew 7%, same-store sales up 3%. Places like Asia, Latin America, Africa saw system sales jump 10% or even more, just booming overseas.
But KFC US went the other way, didn't it?
It did. That's the contrast. In the U.S., system sales dropped 8%, and same-store sales were down 5%. It really shows how different the markets can be. A brand can be crushing it globally with facing challenges at home.
Fascinating. And were there any other sort of unusual items affecting KFC's numbers?
Well, yeah, there were those big franchise changes. Remember, back in Q1, Yum ended agreements in Turkey. That meant closing, I think, 283 KFCs there, plus some Pizza Huts, because they weren't meeting standards. But then on the flip side, late last year, they bought back the master franchise rights in Germany for KFC and Pizza Hut. So there's always this portfolio shuffling happening in the background.
Right. Okay, so from KFC's mixed results, let's go to Taco Bell. Sounds like they were the consistent winner.
Yeah, Taco Bell just keeps delivering. System sales up 6%, same-store sales up a solid 4%. And that 4% same-store sales growth was consistent too. Saw it in the U.S. and internationally. They also added 50 new restaurants in 10 countries. One small note, their company-owned restaurant margins dipped slightly, about 1.1 percentage points to 24.5%. Still very high, but a slight dip.
So when you hear about a brand like Taco Bell just consistently beating its category, what does that mean for you, the customer? Often it means reliability, right? You know what to expect, they deliver it well, that builds loyalty. Seems like they have a really strong focus.
Definitely. Okay, now for Pizza Hut. They seem to be facing, let's call it choppier waters.
Yeah, the numbers look tougher. System sales down 1%, same-store sales also down 1%, and a bigger drop in operating profit, down 15%.
Right, but that 15% needs some context. It wasn't all about falling sales. A big chunk of that profit drop, actually about 2/3 of it, came from specific things like timing of tech spending, costs related to transitioning some franchise groups, and expenses for their big global franchise meeting. So these are more like investments or one-off operational costs, not necessarily a sign that people stopped ordering pizza.
That's a really important clarification, so you have to look past the headline profit number sometimes. What about store count?
Well, they opened 254 gross new units, which sounds good, but their total unit count stayed flat. Suggests there were also closures balancing out the openings. And again, we see that international versus U.S. split. Pizza Hut International actually grew a bit system, and same-store sales both up 2%. But the U.S. market was down quite a bit. System sales fell 6%, same-store sales fell 5%. Similar pattern to KFC, just maybe more pronounced on the profit side due to those costs.
So for you listening, a dip in profit doesn't always mean the brand is failing with customers. Sometimes it's about the company spending money now, hoping for gains later.
Exactly. And then finally, there's the smallest brand in the group, Habit Burger & Grill.
Right. How did they fare?
It was a tougher quarter for them. System sales were down 1%, same-store sales down 4%. And they only added one gross new restaurant. So smaller scale and facing some pressure right now.
Yeah, that does sound challenging. Makes you wonder how a big company like Yum manages a smaller brand that's not quite keeping pace. Where do you put the focus and resources?
It's definitely a portfolio management challenge. Not every brand will be firing on all cylinders at the same time.
Okay, looking forward then. Yum has these long-term growth targets they talk about, their sort of growth algorithm. What are they aiming for?
Yeah, they first laid this out back in 2022. It's their roadmap. They're targeting 5% unit growth annually, 7% system sales growth, excluding currency impacts and any extra weeks in the calendar, and at least 8% core operating profit growth, again, ex-currency, and that 53rd week effect. These aren't just numbers on a slide. For you listening, these targets drive decisions. They influence where stores open, what's on the menu. It shapes the future of the brands you interact with.
Right. So let's wrap this deep dive up. We've looked at a global fast food giant, Yum Brands, clearly making huge strides in digital, undergoing a really significant leadership change, a company definitely in motion.
Absolutely. And we saw quite different stories across the brands. KFC and Taco Bell showing strength, special KFC internationally. Pizza Hut dealing with some specific investment costs that hit profits alongside U.S. market challenges, and Habit Burger and Grill having a tougher time. It really paints a picture of a dynamic, complex landscape.
So here's something to think about. You see these differences. KFC, strong here, weaker there. Taco Bell, consistent. Pizza Hut, investing but struggling in the U.S. And you have these ambitious growth targets for the whole company. How does Yum Brands make sure all its big names, especially the ones facing headwinds like Pizza Hut US or KFC US, can actually thrive and hit those goals, especially now with digital changing everything and new ideas like the Live Más Café popping up? What's the strategy to lift all boats in this ever-changing food world? That seems like the big question for them going forward.